So what I wanted to do was focus in on tax planning for property investors, because this is the time of year. It is early May, and so we need a little bit of time to basically potentially do some of these things, and in terms of getting ourselves in order for the next tax round. So the first one, and one of the most common ones we get asked about, is obviously the ability to pay potentially 12 months expenses in advance. And that's a rule that's allowable when it comes to residential investment properties. And the biggest one, obviously one of the biggest costs for a lot of people, is the interest cost. And so talk to us about the interest in advance, interest cost that might be claimable, and what are some of the pros and cons associated with that, Julia?
Right. Well, first of all, when you enter into this arrangement, it's not just enough to work out what the interest is and pay it off the loan. You've got to make an arrangement with your bank that they actually do charge you the interest, and that's what you pay to get interest in advance. And then you've got to think about, is this the year to do it? And the tax brackets aren't that different over the next few years, so you can look at your income and also whether you might be taking time off work. So if you pay 2 years worth of interest in this year, then next year the only way you're going to get any interest deduction is to pay a year in advance again. So you see, you've lost that advantage. You've just got 1 year's interest next year, and you're locked into paying it in advance each time in order to get any deduction at all. So you want to save it for that big capital gain or something like that. Or on the other side of the coin, save it for a time when you might take a year off work for family or whatever reasons.
Yep.
So you make the extra payment the year before you take the time off work, and then when you don't need the deduction so much in the following year, you can catch up, and then the year after that it's all business as usual.
Yeah, so there's a couple of really important points that you make there. In the event that if your income is going to be regular over a long period of time, once you're sort of in this interest in advance, you then have to keep rolling it over and over. And so a lot of people think, well, why am I doing this? I mean, there's potentially a cost for your tax agent to do that. You also, if you're working with a broker, this needs to be put in place with a lender. That's why we're talking about it in May, because it does take a bit of time, and you ultimately need to pay that money into the bank. So there's a record and documentation, which is what Julia was saying. So the best time when these things are advantageous is in the event that you have a high income year that you want to offset the tax. And then to Julia's point, if you're having maternity leave or paternity leave and that income's going to drop considerably in the next year or two, that's the run up and planning that we're talking about. So it may not be applicable for you this year. Or the other thing, if you're maybe coming closer to retirement, and the same principles apply in terms of if your income's going to drop substantially, then the interest in advance on lending is something to consider as part of your tax planning. The other ones which are probably a little bit less known for some people, Julia, is things like rates, insurances, body corporates. Do you see a lot of that throughout the banned tax practices in terms of people trying to pay those in advance?
No, not really. This is more, I've included this more as a warning to people that you can only pay 12 months in advance. So if your body corporate fees are already in advance, you can't go and pay another 12 months worth and claim a deduction for it.
So a lot of people don't realise that, but in terms of, obviously, body corporate fees don't run necessarily on a financial year. So the example there is if you've paid body corporate fees up until the 31st of December already in advance, then technically you've only got 6 months of additional fees in advance. And I think some of the other challenges there is, again, you've got to actually pay it before 30 June, and you've got to have documented evidence of that. And I'm just trying to think from a rates notice or from a council point of view, how would they account for that, and what sort of record information would they provide to you?
Oh, you can get a statement off most councils that will show the payment being made. So that's,
okay.
Yeah.
But it's certainly not something that I hear often about, because
No.
it's not a huge amount of money, whereas the interest in advance on a loan potentially has some advantages associated with that. So that's interesting.
Yeah, it's just a warning.
Just a warning.